Almost 2 years ago, the Chinese regulator started an investigation into the internet platforms, including Alibaba, Didi, and many others. Recently, there have been market rumors that the attitude of the Chinese government is changing, mainly due to a huge pressure on economic stability and unemployment figures. Dennis, can you please give us an update on the latest developments?
Two unverified pieces of information have been spread recently. The first one was that the Chinese regulator would end the one-year investigation into Didi for an alleged breach of cybersecurity laws and the IPO in the New York Stock Exchange without following the necessary procedures from the Chinese government. The second one was relating to the Ant Group, the financial arms of Alibaba. The rumor had it that Ant Group will resume its co-listing process in Hong Kong and Shanghai's stock exchange. Both events were symbolic cases for the Chinese platform companies. The antitrust law, the consolidation of the property market, and the COVID lockdown put the Chinese economy under a lot of pressure. Chinese Premier Li Keqiang has appeared more frequently in the media, emphasizing on employment and economic growth in late May this year. He hosted emergency party member meetings with over 100,000 participants and urged for new measures to save the Chinese economy. Given the current situations, a lot of people expected the Chinese government to act and help the economy turn around. The rumor relating to Didi spread rapidly after Didi had submitted an irreversible offer for delisting its stock from the New York Stock Exchange. At the same time, the two other companies, namely Full Truck Alliance and Kanzhun, which were also internet platforms and went for a listing in the US with similar timing, were back on the Chinese App Store in recent days. Regarding the rumor about Ant Group resuming its IPO, we noticed that Ant Group has already complied with the Chinese banking regulations recently. The capital requirement is the same as for the traditional banks. Ant Group's business model and its profitability profile have changed completely and look totally different than before. My interpretations of the above event is that there were no changes from the Chinese government's part. The role of the government is to create a fair and level playing field for the private enterprise to compete, which is beneficial for the Chinese economy in the long term. On the positive side, a lot of uncertainty has been removed now. When companies such as Didi or Ant Group adjust their business model and comply with the latest regulations, then they receive the green light and businesses may continue. To sum up, the new Ant Group need to assume credit risk the same way as the bank do for the lending business, and the new Didi must protect consumer data and follows the cybersecurity law.
What would be your attitude for investing in Chinese internet platform companies in the future?
I remain positive in terms of investment opportunities within the internet platform sector, preferably some internet companies with a smaller scale which shows a high degree of inner strength in the respective field. Because of the antitrust regulations, I think the internet giants could face further pressure like, for example, forced disposal of assets in the future. Overall, I believe now is a golden time for smaller internet companies to stand up, and the HSZ China equity team will surely keep an eye on them on behalf of the investor in our fund.
That's it for today. Thank you for watching and hope to see you again in the next episode.